Hello and welcome, and we're here at Holistic Investments, and I'm your host, Konstantin Kogan, and I'm excited to have an amazing guest today, Jan Stranberg, who's the CEO and co-founder of Acquirified. Hi, Jan.
Hey, buddy, how are you doing?
I'm amazing, like it's the first recording of this year, 2024, after a crazy new year, celebrations. The market is excited, the ETFs are eventually gonna get approved, right? There's a lot of
No,
momentum.
it's a bull market coming, right? It's a
Yeah.
bull market coming. I'm
So
excited too.
yes, we're all excited, and it's a perfect time to basically talk about other part of the business. And I'm really grateful to have you here because we're going to talk about like the merger and acquisitions in crypto, which is a rare topic and a very important one. But before we start, traditionally, I want to throw a legal disclaimer that this content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, any other advice. So now we can talk about fun things, right? I mean, I've known you
Yes,
for
finally.
some time. You've launched multiple companies. You've been successful entrepreneur, technocrat, but first, let us know about your journey. How did you get into crypto and why it was so attractive to you first place?
Yeah, that's a good question. I'm actually a very OG. I started my crypto career in 2011 in a very random place in Finland in a home party meeting Martti Malm. People who don't know who Martti Malm is, he was basically one of the core developers of BTC back in the days, and also was contributing kind of a lot of code with Satoshi himself. But yeah, in the party, he approached me, we talked, and he was explaining about this new currency, digital currency that will change the world and blah, blah, blah. I didn't believe it at first. I started diving in more and more, and man, oh man, it's been a ride. It's been a hell of a ride.
No,
Yeah.
that's beautiful. I mean, so let's go a little bit about your transition from a person who wasn't a believer. You become a believer. Let's imagine like in 2012 you got more interested. What was, your steps to actually get more involved into the industry?
Yeah, so the startup scene in Finland wasn't that vibrant back then. It was mostly mobile games, it was mostly banking, it was mostly that new things, so to say. But eventually, there was more and more forums about Bitcoin. I found myself wandering around in different dark forums also.
Mhm.
And then it hit me that, hey, wow, you can actually use this magic internet money to buy something online. And then I figure out like, hey, wow, this is something that I want to do. And people who don't know me, my background is actually in marketing, SEO, and overall like online marketing. I was doing a lot of consulting for the big banks, pharmacies, and even media companies in Finland. So for me, being online, doing 4chans, 8chans, I was there. I was kind of like in the culture. But yeah, BTC started emerging, I think in 2012, 2013, more and more, and it caught my eye, so to say. But unfortunately, in Finland, there was no one building anything on it. There were some, and I'm very happy that Kangas Brothers, which is local Bitcoins, they actually made the first BTC peer-to-peer Bitcoin marketplace. But yeah, from that on, my curiosity became like an obsession. Like I just started exploring and exploring and exploring. And then something very remarkable happened in 2015. One of my American friends sent me a message on Labor Day. It's Labor Day, but in Finland it's called Vappu, and it's like the biggest celebration day. It's like when whole Finland goes absolutely ballistic. Like we go and party and so forth. And there was this one American dude that said like, "Hey, can you arrange some things for this guy. He's coming to America. He's coming from Tallinn to Finland, and he wants to have a good time. Could you host him? I said, yes, sure. Um, Eventually, what happened? That guy was Ray Youssef. He was the CEO of Paxful. He has just launched Paxful back in the days, and from there on, oh man, he got me hooked. He got me hooked bad.
So that was in 2016 when you became a VP of marketing for Paxful, right? And you started your journey.
No. It was in 2015. I actually joined the company. I was first
Okay.
as a consultant. I didn't believe it at first. I was like just touching grounds, being like, okay, what are these guys doing? Like, I don't really believe what they're like. Hey, this cryptocurrency, how can you make money with it? But me, I'm coming from a marketing analytic background, and I started seeing the statistics. They were remarkable. Like month over month growth, organic traffic were growing. The traffic were coming from everywhere around the world. It was kind of a good thing because they were the biggest client, if you think about it, on the amount of web users they had. It was my biggest client. So I started being more and more curious. It's like, how can I scale this up? What can I do? What can we do to get this site better? And eventually what happened? Yeah, in 2016, they hired me full time and I moved to Tallinn.
Nice. So interesting journey. So from there, you spent 4 years with Paxful, right? I'm sure you learned a lot. Then you went to Yield App, right? As if I'm not mistaken, and then basically slowly you kind of, I guess, started to plan the idea for Acquirify, right?
Yeah, that's correct. That's correct. But yeah, they all learned me in different things. And with Acquire, I'm very happy of the things that I learned, of the people I knew. And it definitely helps that you have been in the industry for such a long time because you have to understand the nuances. And when we talk about this is boring topic, but merchant acquisitions, there's so many different things that can go wrong when you do crypto buyouts or crypto company buyouts and sellouts. So
Yes.
many different things.
And
But
that's what we want to focus on. Just jumping straight forward to this topic, like when founders start a company, rarely somebody thinks, oh, like especially when it's their first baby, first company, right? So they rarely think, oh, I'm going to be acquired. They're excited about the idea. They know that they can solve particular problem better than someone else, right? And they go full force. Somebody takes over operations, someone takes over marketing, like go, right? That's the mode. Now, there are a lot of nuances, obviously, that get neglected, especially from the legal compliance side, like potential, like other like risk management things, which is totally fine. Now, in your experience, if you, in retrospect, you've looked at hundreds of companies already, right? And if you look at the patterns, like maybe you can identify top 3, top 5. What would be your first advice to think through when you're just starting a company?
pick the founders very closely. Like those guys that you're going to be grinding with, they need to have the same ambition. They're going to be on the trenches all the time. Getting the first customer is the hardest part of the business, to be honest. Like with with Paxful, it was kind of the opposite. Like Paxful was kind of like a golden goose. Everything was handed out, but despite that, we had to figure out different things. When I joined Paxful, we were 5 people. When I left, we have more than 350 people in the company working, and we had everything from finances, legal, compliance, and no one from the team had actual experience in that level. But yeah, from the new point, like let's say you're starting a new crypto company and you don't know nothing about finances or anything else, the biggest thing that you can do, get good people around you, get good advisors around you, and third of all, record everything that you can. Recording, tracking, keeping tracks of your books, it's the basic things of business, but it will save you so much time.
So what you're talking about, okay, focus, let's say, on finance, right? So first we're talking about bookkeeping, And maybe if the budget allows, like, I don't know, like a full-time bookkeeper or a firm that would you would outsource to keep the record. Set or later on, as people I know do, fractional CFO, again, like when the company matures. Now, there are a lot of constraints when you face the reality of the startup, right? You don't have enough budget, as you mentioned. The first sale is the hardest. So what would you do advise to someone in the early stages that they're not having a lot of budget? And let's imagine the two founders don't have financial background. They have the basic Excel spreadsheet knowledge, which they record in their transactions. A lot of them are on chain, not necessarily they even have access to a bank account, right? So maybe some other like practical tips there.
I think the main point here is to have everything in a centralized place so you can easily find them. Every receipt, everything. I think it's kind of boring subject, but once you scale up and you have a solution or have a centralized place where you can find everything, that's number one. That will easily, you can easily scale it up if you are bringing more people, you are getting consultants to look at you. I mean, if you have everything in centralized place, it's so easy. It's just makes life so much easier.
But when you're talking about centralized place, let's define it very, very clearly, right? So you're talking about, let's say, a Gnosis Safe wallet that is a multi-sig wallet, and let's say two, three, or more founders have access to it, and all the transactions are actually can be traced back from the initial inception of the company, right? That's what you're talking about?
Yes, correct. And I think overall, like you can always import, export. You can do a lot of different things with Etherscan. You can use a lot of different softwares nowadays also. But the main thing is to have everything in a centralized place so you can actually do an audit once that comes out.
Now, the irony that, as we know, some of the businesses are decentralized, right? Or at least they're marketing themselves as one, right? Which sometimes creates a conflict on a philosophical level, right? And on a mission statement level. Like, how can you store all your finance in a centralized fashion, right? At the same time, run a decentralized project?
Yeah, well, you have a lot of DAOs coming to sell, and yeah, it's a mess. Um, but I think overall, like people are getting more mature. I think our generations, they're very good with numbers. They're very good with having some kind of organization. I think if you have some kind of organization, that even helps a lot. With DAOs, it's a little bit different. We had some cases where it was impossible to go through numbers, and unfortunately, because of that, the sale did not happen.
Mhm.
So, but I'm not saying like if you have a distributed team, as we all are, you're in New York, right, at the moment.
Yeah.
So let's say you have a DAO, like you are a distributed team. Again, if you have a centralized place where everything is gathered, it will help you so much more.
Got it. So first start your accounting practices, best practices from a centralized ledger and make sure that everything is recorded. That's tip number one. Noted. What are the other like legal documents that you think is vital, like for the founders and the founding team to have in place that some people are overlooking and not taking into account?
Yeah. So first of all, have a corporate documents in one folder. Let's say you have it in I don't know. There's so many places now. This is just a hypothetical. Let's say you have it in Google Drive, which is not good to have, but at least you have them somewhere. Or maybe you have them physically printed. I don't know. But at least you have them. Like you need your corporate documents to be in one place. You need to have shareholder agreements to be in one place. And all these things eventually will build up to be a big drive of different legal documents, so to say. When I get this a lot. When people talk about M&A, they think about like, oh, it's going to be so much paperwork and blah, 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 blah. Guess what? There's a lot of founders out there that have all these things already planned out. And that's something that I want to say to new founders. Like you should always think ahead. How are you going to exit? What's your exit strategy? Are you going to do this for 5 years, 10 years, 15 years? If not, maybe start planning ahead and having everything in a very organized order. If that
So
makes sense.
yeah, that makes perfect sense. Now, I mean, again, we're talking about the best case scenario when there are very organized founders, some of them, let's say, serial entrepreneurs who already went through this. So every time they raise money, they prepare a deal room, which is everything, folder by
Yeah,
folder,
data room.
data room, like, that's it's like it's perfect, right? So when you have a data room, like obviously you're in a different level, right? And you can still have like few things missing. You can easily like, prepare them in 1 week, let's say. Now, in your experience, what are the biggest pitfalls? Like, I mean, I you have a checklist, right, which you're sending to projects, right? If you would go through a
Correct.
checklist, maybe like really briefly, what will be the most important documentation that you must have like prepared at all times?
I would say corporate documents are one. So we can do KYB. That's the
Hmm.
first thing that buyers are going to do. They want to do KYC, KYB. They're going to see if you're in a blacklist or not. If you're not, you're all good to go. Next thing is contracts with the employees. So here, again, if you have a cap table, it's clean, all the documents are there, there's nothing missing, very easy. Sometimes there are things missing. Sometimes there are founders that promise something along the line. And that's when things can go really wrong because promises and contracts are very different things. And in legal court, I think you have seen it, I have seen it. It can be a devastating thing. Like it can very, very much destruct the company eventually if you don't have this. But yeah, I would say like if you don't have contracts, please keep contracts at least in place. And third of all, finances. Finances. I know that you want to pay $500 to an influencer, is fine. It's on chain, but at least have a software where you can mark what was it used for. Because the more crypto industry gets mature, the more, let's say, TradFi people will come into display and private equity people will look at this. They will look at the contracts, finances, and if there's any legal obligations against your company, and that's it.
Yeah. So this is the core. Now, obviously, maybe some patents or some other IP. Do you have any advice on the trademark, like some of the other aspects that is like also equally important?
Yeah, of course. Like this is something that I don't see DAOs doing a lot. Like they don't have any IP rights or trademark copywriting agreements or whatsoever, which is kind of astonishing because if you have a very good NFT project, those, let's say, NFTs can be in the future used for in whatever way they want, or
Hmm.
someone else wants to use them and you don't have the IP rights. Well, good luck for you.
Hmm.
IP is something that actually in the 90s, in the .com bubble, a lot of people made money with IPs. Why is that? Because IP you can protect. IP you can actually make intellectual protection laws, like, and that's something that I don't see a lot of crypto people doing. And it's actually pretty easy. It's like maximum 6 months to get an IP, maximum.
Yes. And then what about the patents? Like for some technology, how do you see a lot people actually taking care of this?
Yeah, so patents are another thing. There's a totally different market for patents. We had some cases where we are selling and buying patents, but there's so many patents coming in. That's totally another topic. But yeah, if you have a technology that you can patent, you should do it. It might be worth quite a lot.
Now, if I were to ask you like another like pretty direct question in terms of what's the top th sign of the higher valuation for the company. So let's assume you have a situation, let's say two businesses, right? Very similar. Doesn't matter if it's a lending protocol, an exchange, or a launchpad, or any other business, right? And then you have very similar stats in terms of the users, what's the revenue, the cash flow, and everything else. Do you see some other important factors that add value to the company?
Yeah, story. Like
Okay.
you are sharing your story, you're selling your brand, you're selling your what you built. And we can talk about numbers, we can talk about TTMs, we can talk about how much EBITDA some company made and what's the multiplier on this. But in the end, it's all about your story, how you tell the story, and what the story will be after your company has been bought out. And I
Mhm.
think that's something that is very important to remember. Uh, it's not always about numbers, it's usually about sentimental value or stories. They are like, I give you an example. I had a case recently where, let's say, this company was not that great in numbers. Okay. It wasn't producing a lot of money. It was, let's say, a marketplace. Um, it had decent users, decent activities. In any other case, if I would go to a private equity people or some other buyer, they would be no, we will not take it. But it had a very good story. It could have a very good community. That community was very super loyal. And the buyer saw it and the buyer understood like, hey, if I buy this company, I can't really say what it is or whatever because of NDA. It will give my brand exposure that I did not have before. And despite their numbers were crap, they bought it. And it was all about the story. Again, it doesn't really matter what you have in the finances always. Of course, it's good to be profitable. Of course, it's good that you have very good profit margins and so forth. But if you have a community, especially in Web3, that's a very crucial thing to have.
So essentially a loyal customer base, what's what you're saying, and a mission-driven statement that will help those customers to stay after the company will be acquired.
Yeah, exactly. And usually with mergers, like TradFi people, what they do, they look at numbers. Numbers is everything. How much is EBITDA? How much are the multipliers? If you're getting a good multiplier and a low EBITDA, I will buy it. Blah, blah, blah. Very boring. But what new time founders and new time crypto founders that I've seen buying crypto companies, they don't really look at the numbers. They look at the potential. They look at the future, which is kind of different because in traditional M&A, it's all about the numbers. It's all about like, it's very brick and mortar, let's say. It's very
Yes.
brick and mortar. But in crypto, there's so many nuances and there's so many different things that can change during a cycle. And I think the cycle is the key word here.
Yes.
If you can potentially demonstrate that, hey, your product is this now, but hey, maybe in the next cycle it could be this. Hey, wow, your multiplier just went up and you got more buyers and more interest in what you got before. Does that make sense?
Yeah, it makes perfect sense, of course. I mean, we do know that the cycles in crypto are 3-4 years, right? And then some projects make like exponentially more money than like in the bull run than in like in the other cycles, right? So, and that's the definition of like being like more attractive to investors. But let me ask you differently. From a perspective of a private equity investor, like a new age, so to speak, crypto private equity investor, what do you see by talking with them are their biggest fears, the biggest risks? So we identified the attractiveness, right? You know, the user base, the story, like the assets that company might have. Now let's talk about like the other side. Like what are their fears? Like top three.
Regulation.
Okay.
It's a hot topic, but every time I talk with the buyer, it's always about regulation. What are the regulation in this country? What are the future outlooks of this country's regulation on crypto? That's one. And second of all, like if I'm a buyer and I'm a private equity investor, how much is that business reliable on the founder? Okay. Because founders usually in crypto are everything. If a founder leaves, let's say, okay, example, Vitalik, what would happen to Ethereum? Do you think it would survive, or what's your opinion?
My honest opinion that
Yeah,
yes,
it would survive.
Ethereum is now pretty much decentralized and has a lot of incredible developers, incredible like minds. And yes, you have this focus on a leader who is like charismatic and like, in many ways you can say he's genius and like in certain if you don't take it like the part where he dresses in a funky way. So the other side is yes, he's definitely like the leader, but I think Ethereum is like much bigger now and much more diversified. So I think it would survive, yes.
Okay. Well, maybe a private equity people would not say that. They would be like, hey, this is a very big risk. Like their
Mhm.
main leader is Vitalik. Vitalik is dead. Okay. Vitalik is gone or whatever. Uh, Maybe Ethereum is not there. Maybe his vision is not going to be uh,
But,
pulled
but,
on and so forth.
but by the way, we've seen this happen already. There were, if you remember, there was like a few years ago, maybe several times, there was a speculation that he got hacked, and there was a post like as if he was deceased, God forbid.
Oh,
But
yes.
and the price reaction was, if I'm not mistaken, like something like 5-7%. So you're correct. There is a correlation between those factors, but like in Ethereum case, I think it's too big. There's like thousands of people working around this ecosystem, right? If you're talking about a smaller project though, right, who's like, let's say only 50 people, I agree with you. That's a huge risk. And especially if one or two founders or three founders are the main leading force and they are creating like kind of not only the strategy, but they're the main bread bringers in terms of the contracts or any forms of revenues. I agree. That's much bigger risk. So then the question is to you, like, how do you navigate this? Because, like, logically, when we're talking about M&A, that's when the founders, just for someone who never went through it, that's when the founders want to sell their share and actually go and drink pina colada on the beach for maybe for a month, right? Just to relax because they've been working for years as crazy, right? Or maybe it's a smooth transition. So can you explain how do you navigate typically this transition?
Yeah, so there's different things that the buyers look at. First of all, they look at the market opportunity overall. Okay, if the market opportunity is very large, and despite your leader leaves, I think the chances of, despite you would replace the leader with the new one, it will still flourish. There's still a lot of opportunities. There's still a lot of fish coming to you. There's still a lot of contracts that you can make, and so on and so on and so on. Now, if it's a very, very, very niche, let's say, vertical that you're buying out, that's when these things come really in handy. That's when you start thinking like, okay, how does this leader impact the whole society in this community or in this niche? If I buy him out, will they still come to me, or will they come to the second best? And that's a very good question, because there are scenarios where we are potentially buying out potential good niche, but then we realize that, hey, like this guy is still there and he has too much power. Okay, so here comes golden handshake. Have you heard about golden handshake?
Yes, but I think you need to explain this. Yes.
Okay, golden handshake is basically that you stay in a company for 6 to up to 2 years, and you still run the company, you still get paid, but you make sure that the transition of this new buyer will go very good, very smoothly, and nothing bad will happen. And this is very often. This is actually very, like, let's say 90% of the deals that we do, there's going to be a golden handshake. They want to see the CEO stay at least 6 months. There's going to be always in the contract like, hey, please stay for a while. Please see what's going on. But in some cases, if it's an aggressive buyout, it's just firing the leadership and taking over IP and everything else. And this is sometimes what happened with exchanges, because it's very easy to change exchange management. And also, let's say, I would say mining companies are the second ones, but yeah, just two examples.
Yeah, I mean, I think that's a valid point, right? So let's assume also in a positive scenario, right? The two companies agree, there's a golden handshake, obviously stipulated by some kind of contract, right? Have you actually analyzed the companies like that you already closed the deal, right? You know, if both the seller and the buyer are happy. I'm just curious, like, you know, like have you had this like retrospect, like, you know, like 5 to 10 different companies that you already, you know, finalized the deal after 1 year, let's say?
So let's say, um, from my own experience, I would say 8 of them are positive out of 10,
Mm-hmm.
and 2 of them are negative. And 2 of them are negative because of either external problems. This could be nationalities fighting, war, or some disaster that happened, or just that, hey, like business is not there anymore.
Got
That
it.
that's very sad, but it's true.
I mean, it's, yeah, of course, those are risks that are sometimes like are not even like you cannot anticipate them at all, right? You know, that's what we call force majeure in like in the contract.
Yeah. Yeah.
Now,
I
but
mean, you could do. Yeah. Sorry.
no, but let me ask you differently. So, like from experience, because I wanna also let this like that's this episode to help people understand how it really works, right? So, for example, from the moment you agree on all the terms, right? You go through due diligence, back and forth. First of all, let's define like how from A to Z. Let's imagine two companies, like there's a buyer and there's a seller, and you're in the middle who are helping them. How long does it take in average to even conclude the deal so that there will be a first tranche?
This is so. It depends so much. Again, founders, if you guys have all the documents in one place, all the documents centralized, no back deals, no back contracts or anything else, it can be very fast. If not, it will take time. Same thing with financial audits. If you don't have them, it will take time. But let's say the average. Let's say 2 to 3 months, I would say.
Two to
That
three
that
months.
that that's like a very good scenario. Like everything is moving smoothly, everything is going good. Buyer is very hungry to get into the business. Seller is okay, but then there are also these scenarios where you have a little bit more. These are like $100 million deals, and they usually take between 8 to up to 18 months because the
Mhm.
audits are so massive. Um, but we're talking about probably a little bit more smaller audiences here with less than 5 million, 10 million, 25 million. I would say between 4 to 6 months. That's the average.
4 to 6
And
months.
okay, how would it work? How would it start? Let's say you on board to acquire. We start building up a data room. So in the data room, we have uh, 6 different things that we look for. One, corporate records. Two, regulatory documents. So if you have any licenses, anything else, they should be there. A business plan. So business plan should be like made for the next quarter or for the next year, and overall, like, hey, how everything functions. Security issuances and agreements. That's very normal. So whatever contracts you have, please keep them there. IPs in one place, material agreements, and then again, I would say code and security, the
Mhm.
easiest way.
And audits probably of the code or anything, you know.
Yeah, yeah. But usually it is like a seller comes to us, we handshake, we make the agreement, we start understanding like who is your buyer, because you have to be very specific. We get very much people coming to us like, hey, please sell our business. And we're like, okay, like who do we sell? Like who is your potential buyer? That's one. Like you have to be very good at identifying like why would they buy it, what purpose, how would they benefit, and so forth. If you can come up with this will help us so much because we do this ourselves, we do it manually, and after that, we start outreaching. When we send outreach, we can send more than 10,000 emails, let's say in a month. I would say from those, 50 come into a meeting, and from the meeting, we get LOIs.
Mhm.
So after LOI starts the real DD process. We have calls with buyer and seller. There comes a time when I would say 6 weeks go by when just legal makes their work. And after that, this comes an auditor that says like, hey, everything looks correct. And after that, basically more calls. In the end, I would say 4 to 6 months is realistic when you are selling your company. But a
Now,
lot of different things happens during those months.
oh, of course, it's like I'm sure
Yeah.
it's a roller coaster of getting back and forth with documentation, preparing something that is missing, or addressing concerns, right? People might not agree with certain decisions or let's say directions or in the business plan, right? So, etc. Now, I want to ask you another practical question. Let's talk about the type of investors you have, right? So you say you do 10,000 people outreach. Can you elaborate a little bit on the I would say the psychological portrait of and the type of a private equity investor that you are reaching out?
Yeah. So I wouldn't call them private equity investor. I use it because of TradFi, but I would say that they're crypto founders, crypto companies that have just raised money. And why are we targeting them? Is because from their perspective, they raised, let's say, $20 million, $50 million, $60 million. I don't care. They need to build a product.
Mm-hmm.
Why should you build a product yourself if you can buy a customer base with the product that fits your purposes? And it's the same thing with layer ones and layer twos. And this is a pattern that I'm starting to see with layer twos and layer ones. They're hiring chief strategic officers, CSOs, and they're starting to acquire different businesses because the best way of jumpstarting your value is acquiring something that someone else has built, someone else has built a community around, and guess what? It multiplies your own value a lot.
Mm-hmm.
So what I think it will happen in the future, and especially on this run, like 2024, I think there's going to be a lot of acquisitions coming up where companies and layer ones and layer twos realizes that why are we giving grants? Like why are we giving grants? Like last year and year before, there were so many. So sorry about my language. Copy pasta, copy shit that came out,
Oh,
but
good.
actually, like I'm just gonna take a hypothetical name. Let's say Aptos. Let's say Aptos, with their massive amount of treasury, what they have, if they would be very smart, instead of giving grants, they would start buying out these different companies and integrating into Aptos. Boom, your TVL would rise, your AUM will rise, you would probably get more and more users using your chain itself, and boom, that will also be a positive impact of your price. And this is something that I don't understand why they don't do it yet. But I think they're starting to realize like, hey, we are in a point where maybe the grants are not the way to go. And I have nothing against grants. I think it's very positive for a chain to give grants and you can build different things. But I just think that there's so much that we built already that could be reused and basically rebranded.
But to be fair, the grants are typically are smaller checks. We're talking about 50K, maybe up to 250K max, right? As opposed to some of the products that you're referring to, they can cost up like for like starting from like maybe 1 million, right? If I'm not mistaken, right? So now the benefit of it, as you mentioned, it's already, you don't need a proof of concept. You already know it's working. It has a user base, and that's adds value to the entire ecosystem. But I do agree, it's a brilliant strategy, and I think more, I mean, Binance, if you look at it, they're the one who are like nailed it, like they, and then a few other
Yeah.
changes, right? So the ecosystems are probably getting there. It's just probably a lot more hoops. Just so not only from the financial standpoint, it's more about political and bureaucratic standpoint of view, right? Most likely, I don't know. We're speculating here.
Could be. But I like what you said. Like Binance was a good example. They bought shit ton of things. They
Yeah.
actually were trying to buy Paxful at some point in 2018, but we said no. And because we said no, they built their own peer-to-peer marketplace, which is still flourishing. So good for them.
Yes, and this is a great example. Sometimes, like OpenSea, if we can talk a little bit about this one of the like, in my opinion, this is one of the most massive screw ups in the merger and acquisition in crypto world. Like, I don't know why they didn't sell. With all due respect to the guys, I think I respect what they built, but the valuation was pretty reasonable. Like you don't have to be an expert to see that the NFT market is slowly getting into decay, and it's probably a good time to sell, and they said no, and now look at where they are, right? So it's like, we have a saying in our culture that the greedy person pays double the price, right? Now, almost like if direct
Yes.
translation.
Yes.
So what would you say to founders who come up to you, and I'm sure that happens a lot, and they say, guys, we like what you do, we love your expertise, what you're saying, but the valuation is like not there, right? We will not sell for this amount. Like, what would you try to explain to those people who actually are a little bit more greedy and less reasonable?
Yeah, so that's a good question because I get that exactly question so many times. And I have the same answer. Like, do you need to sell now? If no, then wait. Then keep your price, wait. The average time to sell your business is around 6 to 12 months. If you don't get into 6 to 12 months any hits or any interest, then you know that your price is too high. If you want to sell it fast, that's when we're talking about lowering the price and being like very let's say very honest with the founders and being like, hey, we cannot sell this. And I still think, and I do know, that the crypto marketplace overall, or Web3 companies that are selling, they are a little bit overpriced still. They gone down a lot though. They gone down a lot, which is a good thing. And I expect during this run, hopefully people will realize that, hey, there's actually quite a lot of now undervalued assets. But I think still, like, we as crypto people, we have this crypto tax. I think you understand what I mean. Like, for example, if I pay for someone doing marketing in a SaaS or in another industry, I doubtly pay 4,000, 3,000 a month, maybe. If I do this in crypto, I probably pay 8 to 15K easily.
Yes.
Easily. I can go to Twitter, same thing. I want a tweet. All right, it will cost you 1K, $1,000.
Yeah.
Crypto tax. Crypto tax. Everyone that has been in this industry understands it really well. There's a crypto tax and everything.
It's
I understand the
basically,
founders though. Yeah.
yeah, it's basically what you're saying is like a premium that you pay for this industry because it's more expensive, and people are seeing higher multiples. So in a shorter span, like, if you think about the traditional exits, right? M&A or IPO or reverse mergers,
Yeah.
we're talking about, I mean, an average, correct me if I'm wrong, but like 7 to 10 years, right? That's the average timing. Like in crypto, sometimes the average timing between the IDO, like, it's like 3 months or like less than one
Yeah,
year.
sure.
So people naturally get excited because they get 10 to 20x So coming back to the conversation of multiples, it's actually interesting to ask you in your experience from the companies you already dealt with, like if we take the fintech, the multiples can be quite high. Sometimes it can be 20x, right? 20 multiples you're buying. Like in the crypto transactions, crypto M&A, what do you see is the multiples? You can give the range from to.
I would say during bear market they were actually pretty good. Like you could say like anything from 10 to 30x. But
Okay.
now when the bull run is coming back, you can probably see 50x back again, 60x
Wow.
multiple. Yes, that's pretty insane. But then again, um, it's a little bit more complex, right? Some projects have a token. Okay. That token is a money making machine. You can use it in so many different ways. The asset itself, we don't really know what it is from legal perspective. Some say it's a security, some say it's a utility, some say it's, I don't know. We don't know yet, but it's there. And for us, as someone that is doing these M&A transactions, that's the interesting conversation. We use a lot of different market makers to give us some kind of values. We try to come up with different hypotheses, like, okay, you're listed in different exchanges. What exchanges are you listed on? It depends so much. But yeah, valuations during bear market were okay. And again, they're starting to go up. But I would say still, despite they're going up, it's okay because you still have room to go more up. Does that make sense?
It makes total sense, but that's the point. So we're talking about like the cycles, right? Obviously, we all know that during the bull cycles, like especially for projects who have their own token, right? It's like the valuations go up exponentially, right? Because their entire market cap is higher, they have DV, everything right now. My question to you is basically, you mentioned you're using market makers and maybe some other firms to audit and to evaluate, right? How would you evaluate a project? Let's say one is a pure infrastructure, right? That doesn't have a token, that they did equity rounds, everything is like more traditional, as opposed to a project that has token, right? And let's say in the previous cycle, just for the sake of example, like the market cap went to 100 million, and during the bear market, it decreased like 3 to 5 times, right? How would you value this?
So let me get this straight. The one that had the token decreased a lot, and the
Yes.
one that didn't have a token just stayed in the same category, correct?
Yes, exactly.
Okay, so I assume that the one without a token is an infrastructure play,
Correct.
probably. Okay. Well, this is pretty easy. On the infrastructure play stuff, you kind of use the same understanding as with normal tech. So you look at the whole sector, you see what's the potential out there, you see some of their revenue numbers, you can buy this data quite easily. And after that, you can see like some projectors, like, okay, usually we know their numbers. So we're talking about trailing 12 months. Trailing 12 months means that you take revenues from this day until 12 months last, and you get some kind of average. And from there on, you can actually start building different scenarios. With the token one, this is very interesting. During bear market, and if your audience has someone that is very good with this, please contact me because we haven't found a formula yet how to, let's say during bear market, to do this correctly. And here comes again, like it's all about the buyer's speculative story and the buyer's how he sees the value of the company. Let's say this company does not do revenue at all, just has a token pumped, and dumped. It has nothing else. Maybe it has tech. The valuation would probably come from very small portion of the token, and then the industry itself, and then the tech.
Mhm.
And that's the easiest way to do it. at the moment. And if anyone else, there are some other good companies. I have to mention Technos because they are one of the most used valuation companies in M&A in the Web3. They're specialized in this, but even they have problems with this. So yeah, the question is very hard. It's, again, what I want your audience and founders out there to understand, it's not always about the numbers, it's about the story, it's about the community, it's about what you build and how you can sell it.
Yeah.
Because, I mean, there's so many different buyers, there's so many different use cases. The more you can understand your buyer's use case for your product, the most highly likely scenario it is that it's going to be bought. If you can sell it right. But if you can't, numbers don't matter. And I've seen that happen also. Very good numbers, everything correctly. But if you don't have the story, oh man, it's very hard to move the needle.
100%. Now, in terms of like the, your perspective and the future. So obviously we talked about the M&A part, which is your core business, right? And if anyone wants to, to contact you, what would be the first step? Like, like let's take two type of people, right? Like, so two types, like one is a founder who wants to address the potential evaluation. First, they need to do, the job of due diligence, right? And if you can help to understand the process. And the second scenario, the potential buyer who goes to your website or to the Telegram group that you post everything in, and they found the project that they potentially interested. So let's describe those two scenarios.
Yeah, so we made the onboarding process quite simple. For the sell side, we have acquire.fi/sell. There's a form there that you fill. It will automatically come to me and 3 other guys, and we will all manually review it, have a call with you, and understand, hey, can you actually sell this? I would say overall, like the selling process is the easiest part. And you know what? Like getting a price or getting your product listed, it doesn't cost you anything. It's good to be there. And again, it would take 6 to 12 months sometimes to sell it. There's like nothing. There's only upside for you to actually list your product. From the buy side perspective, this is a little bit different. So usually you have the sell side broker and the buy side broker. We are not brokers yet. We will be brokers probably in 2 months, 3 months, once we have the crowdfunding license. But we do have services that we offer. On the buy side, it's a totally different game because these buyers, they are usually, I'll give you a real example that came true, let's say 4 weeks ago. Buyer is a payment company in Web2. He is looking for, they're very specific also when they come to us. They're looking for different markets, and these different markets would be Hong Kong and Singapore. They would have monthly active users more than 50,000. They don't want the company to have a token, and they want the company to have VASP license, so virtual asset service provider license, and probably other licenses, of course. And now what happens next is that we have an interview, we understand what you want, and we probably have a monthly retainer to start digging companies for you. And this is it's totally different from selling a company because you are actually approaching companies that are very profitable and do not want to sell. So imagine going to the hottest girl out there and being like, "Hey, you want to have a drink?" And no, it's true. It's very hard, and it's the same thing. We haven't touched secondaries yet, but the same thing is with secondaries. Like there are some hot projects. For example, okay, I'm gonna name it. Monad, for example, will not talk to you at the moment. They just don't. There's Eigenlayer, same thing. There's this hot chicks that you can't reach, but if you reach them the correct way, the outcome can be very good for both parties. But it's
And,
just a little different thing.
and just to explain, you're talking about secondaries, mostly tokens, right? Or sometimes equity as well.
Yeah, so the secondaries market is very different. It's very vibrant. I'm gonna mention some names here. I think Nick Coate from Second Lane. He's the CEO there. He's one of the biggest. They are the biggest secondaries marketplace at the moment after us.
Mm-hmm.
He has his vision was very good, and one reason that we started going into secondaries was because of him. Nick has been around from 2012, same thing, very OG. And his vision was that, hey, we need more liquidity into the game.
Mm-hmm.
And that resonated for me very well because in M&A and in secondaries, we have something that is very awful in crypto. And that's that we all crypto players, we keep everything inside. You have these inner circles. No one will come to the inner circles. And if you get into the inner circles, you made it. And we will not take anyone else from there. Okay, that's totally fine. I mean, I make money, you make money, we've been around for a while, but in the longer run, it doesn't work. Why? It's because of the liquidity
Mm-hmm.
and it's because of the open order book. Unfortunately, if all these deals are going through back doors and people can see them, there's no new liquidity coming in. And both me and Nick and some other brokers and some other founders have this vision that, hey, let's, instead of fighting each other, build this open marketplace, open order book where people can freely see what's out there and trade.
Mm-hmm.
Because if we can trade, we have liquidity. If there's liquidity, we can get new people on board. And that's very important. And that's one crucial thing that has been my thesis from the start when I started building Acquirify. You have to have an open order book. If there's no chance of you to exit your Web3 startup, what's the point of building? We're just fuck around. Okay, again, sorry about my language.
It's okay.
We're just gonna fuck around the community. We're gonna fuck more people. Plebs are gonna cry and so forth. If think about the solution, if there is another solution where another buyer comes in that has a passion, and the founder that has been building for 4 or 5 years, his startup can finally exit, can go do something else. I think the outcome is like net positive for the ecosystem and for the community and also for the founder. It's like a perfect cycle.
But I
So the
think
second,
it's worthwhile
yeah.
to explain what you actually mean by open order book, because again, for someone who doesn't have like the
Oh,
TrideFi
okay.
experience, so we have the OTC market, which is like, over the counter. So that happens like sometimes, like let's say we have like, I don't know, I have 500K worth of tokens to sell to you. Doesn't matter which tokens, like and you are buying, so we do it like that, like off the market, right? Nobody sees that. I just transfer you the tokens, you transfer me, let's say, I don't know, stable coins. Boom, done, right? And that's happened like, whether it's the lockup period or not, that's a different story. And you have an open order book, which is actually already exists in decentralized exchanges and centralized exchanges, right? So in your case, can you elaborate a little bit? What do you mean by open order book, like beyond the level of traditional exchanges?
Yeah, no worries. So I think where we crypto native people are very good at is using Telegram somehow. I don't know. I don't know how we started using it so much, but we use it. And there's shit ton of channels, there's discords and so forth. And if we can push those deals into Telegram, into Notion, or into websites where people can see them openly, we can actually get more views. The more views there are, the more success rate will go up. And this is the same thing with our deal flow channel. We made it because we thought that, hey, we were in a crucial point last year, actually in January. I remember this. Like, we were like, hey, let's build a wall so no one else can see our deals. And only people that have our token can see our deals. But eventually, what I realized very early on, that doesn't make us further. That actually just hinders us. And it was the same thing with Paxful. So
Mhm.
Paxful was one of the biggest marketplaces out there. You could buy Bitcoin with PayPal, Visa, Vanilla Visa, iTunes, whatever you can imagine. We had it. Why it was so successful was because of the openness. And the same thing what eBay did with clothing and with having the possibility to list whatever. I vision to do the same thing. I vision that eventually in our marketplace, in our Web3 M&A marketplace, we will have companies, we will have IPs, we will have NFTs. We actually have an NFT now, which is it's a $500,000 NFT. I see more and more use cases to have an open ledger or an open order book than just having it closed. And banking is closed. TradFi is closed. Let's build something that is against it.
But if I would play a devil's advocate role, like in this case, like there could be an argument, I would say, presented that like if you have an open order book, let's imagine a company X sells $1 million worth of tokens, and it's a publicly already on exchanges, right? That might give you, I would say, a bad signal that the company, like it's not whatever, it's not like solvent or some other challenges, and why do they need to sell if there's already listed, right? So how would you avoid this kind of problematic situation that will have a, impact in the company?
Yeah, that's a very good point. And this is where I think founders out there, you need to take responsibility, and we need to communicate us better. Like we all think that running a crypto company is that you make trillions of dollars and you have no fucking expenses or whatsoever. Actually, crypto is very expensive. Having devs is very expensive. Having doing marketing is very expensive. If you want to survive, and if your project wants to survive, unfortunately, sometimes they want to sell tokens. They need to sell tokens, and I feel I just think overall, like with this situation again, um, you can do it the good way, which is informing and which is like saying like, hey, we are using these funds for XYZ. And actually last month we did this for, let's say, a top 150 CMC project. They sold almost $800,000 worth of their tokens to us.
Mm-hmm.
To us. Uh, and that went well. Price has not dropped. Community is happy. They had a reason for doing it. All went well. But there are cases, I agree with you, when we have listed something and it has basically backfired. It has like, oh my, because founders, we can be very emotional. And if I would see like someone selling Acquirify shares, I would probably react like, what the hell? You don't believe it? You don't believe me anymore? But then on another side, like funds, investors, they need liquidity. And if you can get another investor there that will buy your shares or whatever, I think it's a positive outcome. Net positive.
Yeah, I agree with you. It just has to be properly articulated and like delivered to the community in the right way. And if it is, I'm sure it can be successful, right? And as you mentioned, there's good examples. By the way, just to clarify, this project that you mentioned, like, do they also have a vesting schedule, right? So you cannot sell the tokens immediately. You can just sell them in portions, right?
Yeah, so they only had a 30-day vesting schedule.
Okay. Until the
Yeah.
full unlock of all the
Yeah.
800,000? Okay.
Yeah.
So then, but is there like a way, is there like a gentleman agreement that you're not gonna like dump everything on the market, right? Do they have like some kind of negotiation that you will sell it with market maker, I don't know, 3 to 5% like price impact or something like that?
Yeah. So good question. in the old days, you could really, these deals were very common, and the graph would look like, woo, like going
Exactly.
down like a fucking rocket ship. But nowadays, the investors are much more sophisticated. They do care about the project themselves. Unfortunately, with FTX and Almeida, they did not see this. I was unfortunate to, well, not unfortunate, but let's say I saw what they did and I did not like it. And I think it's very bad when there are these market makers that are using projects that are in very dire situation and just dumping on the community.
Of
But
course.
hey,
Yeah, trust me,
yeah,
we went through it. Alameda was our investor, so it's hard to talk about it even because we went through this. I mean, in one of our projects, and yeah, that's it is what it is. So that's why I think like it's important to have also like investors that you align with the values and the vision, right? That they tell, okay, we believe in you guys. We don't want to sell right now because we see that maybe by the end of 2024, like your project will do another 2, 3x, and we prefer to hold it or maybe sell a little bit, like but like not everything, right? So because at the end of the day, if we're going to be completely transparent here, like the reason why those secondaries are being traded because someone is seeing an opportunity to make, a profit, right? They're not doing it for charity because they're like big believers of the project. They want to make money, right? So they see according to technical analysis, like I don't know, fundamental analysis that okay, well the team is working, the product is developing, whatever, like and they see the potential. Maybe the last bull run they were already 20x, right? And now they're in, for whatever reason, they're in a lower trend, right? So they see the potential where it can go, right? And that's why they can hold it and then sell it slowly, take into account the daily volume, like the not to kill the price and not to move the price. That's how I would hope the reasonable investors, not the vulture capital investors, but actually investors who want to support you, they would act. Now, I'm sure in your experience, there are different scenarios, right? So,
yeah,
yes.
yeah. Fortunately,
But yeah, but that's good to know that out of 10 projects that you've concluded, like at least 8 of them are happy with the transaction overall, right? So that's, I think it gives you like a hope in the in the M&A part. And in the secondaries, like if I would ask you also very openly, like out of the 10 projects, how many of them are you think are happy with the transaction from both sides?
I would say 10. Like,
Seriously, 10 out of
yeah,
10.
so yeah. So on the secondary side, like again, like there are sophisticated founders at the moment that understand like how to run a fund. Unfortunately, when you run a fund, you have to liquidate at some point. You have a 5-year runaway. After 5 years, there will come a time when the fund runs out. Uh, Usually, the secondary transactions are related to funds need to liquidate. Sometimes there are opportunistic people that are taking this price movement and being like, all right, I'm happy with this. But guess what? The one that is buying it is going to be a holder. Like they are true believers. And I think the secondaries market overall, like it's been a very positive thing for crypto.
Mm-hmm.
And I'm very sad I didn't see it that much last run, but this run I'm very happy with the people that I work with. I'm very happy with people like you also bring on board and be like, hey, let's do something together. I just think this year and overall, like we are in a totally new cycle, and this cycle will be very positive. At least this is how I see it.
I
Last year, last year was so bad, man. So bad.
I would say that for particular niches, like for gamify, it was amazing. For metaverses, it was amazing, right? And some people like did like crazy projects with like billions of dollars in market cap, like with almost no product. So with all the like, but I do agree it was disproportional, right? So there was some niches which were having like their like aha moment and this amazing like renaissance and there are others which were undervalued, by the way, unjustifiably undervalued, which were having a good product but because they were not in the trend, nobody even looked at them, right? So I think what you're saying that hopefully this cycle we're gonna get a more balanced like outlook on the market, what the valuations will be more balanced, and we will overall start learning from the mistakes. Um, by the way, with this, I want to ask you like one of the last questions, like what do you think is like one of the hot trends, like top two or three hot trends in the M&A space? Like you that you've mentioned you have certain parameters people are looking for.
Payment solutions,
Mhm.
100%. Licenses, 100%. Exchanges are going to come later. We do have the exchanges that are going back and forth now. Uh, this is my joker. This is my joker. And this is what I want to see. I know that in traditional games, M&A is very, very, very important. In Gamify, I haven't seen that yet. And I had one company that came to us 2 months ago that wanted to get listed. Bull market started. They pulled off and they're like, all right, we don't need it. We don't need it. And they were producing actually very good revenue. They made over $2.5 million a year with this game. And I hope, and I really hope that gaming and somehow related to NFTs are going to be the new vertical in this M&A space. Who knows? But yeah, top three for sure: ecosystems, uh, payment solutions, licenses, and then gamify.
And when you say licenses, can you elaborate what do you mean by that?
Okay, so as you guys know, or maybe you guys don't, there's a lot of new regulations coming up. There's MiCA, which is the
Mhm.
European Union of moving money around with digital currencies. That's going to come in place next year, or actually this year in the summer. It's very hard to get a license at the moment. It's getting very hard to get licenses in different jurisdictions. Now, if you are a big player and you have millions of customers and you are profitable and you want to expand, the easiest way of getting these licenses is not applying yourself, it's actually buying them out. So there's going to be a lot of buying of these different licenses. Hopefully, they're going to be, I think most of them will be in Europe, probably also in Hong Kong. Hong Kong just, I think 2 months ago, they published the VASP license, Virtual Asset Service Provider license, and they had
Mhm.
180 applicants trying to get the license. But yeah, license is incoming and licenses is needed. So if you have one, I think that's going to be something hot. One of the main things why we at the Firefly went with the licensing was because of this. I think they're going to be worth something in the future. And I
Mhm.
think this is my another joker. I'm going to be very curious how other launch pads are going to survive with the DAO structure when MiCA and other come in place. And if you don't have a license, how can you market or do anything?
Yeah, that's a good question. We're actually going through certain exercises of this. Like I've been researching this topic quite diligently, and it is a big question. Yeah.
Yeah.
Not only that, by the way, not only Launchpad, I would say like any businesses, like if you think about exchanges, any type of syndicates, like anywhere that you have a crowdfunding element, right? Or you have the custody of assets at some point, doesn't matter if it's like for 2 seconds or for 2 weeks, right? So that's a very, very important question, which I also like implore like people to take a look at. And doesn't matter, by the way, not only Hong Kong, there's a lot of like great jurisdictions as well, even in offshore, which let's be honest, we know that most of the companies are registered in Cayman, BVI, Seychelles, like St. Kitts and Nevis and other like Caribbean islands, and or Gibraltar or some other jurisdictions of this caliber, Cyprus. And they're already also starting to develop like very, very robust rules, how to get the VASP or equivalent to VASP of Hong Kong, right? So definitely talk to your compliance officers, legal advisors, whoever you rely on this, because this is really important. Um, we already, I mean, I really enjoyed this conversation. Yeah. This is like the fact that we already went over like I don't even know how long, right, is a good
Oh,
sign.
no.
So the M&A is hot. I really truly believe in your vision too, that the M&A will be like the new hot thing and the something that will be reinvented. Let's not forget that the entire industry is only what 14, 15 years old, so that's like it's still very early. So hence we're only developing the framework how to properly value the companies, how to properly transact, how to even start this. So this is a very hot new niche. If you have projects, amazing projects that you think you want to sell either fully or exit or partially, please contact the guys. What is the best way to contact you, by the way, Jan?
Yeah,
Twitter,
just go
Instagram?
to acquire.fi and
Okay.
you have everything there.
Perfect. Same for investors. And then like I wanna leave this on a positive note on a personal question, which I never I actually tell people what I'm gonna ask because that's why it's pure and
You
very,
should.
very beautiful. So my question to you, because we all do things like for a reason. We all have purpose somehow, like somewhere conscious and unconscious. So I want to ask you a very important question. So what is the meaning of life to you?
Friends, family, and enjoying your every moment that you have in this life. Um, I think we as crypto people, we are too focused on money, to be honest. And money is not everything. Remember, there's family members that love you. There's a lot of bad things happening in the world at the moment. And it's sometimes very hard to see the positivity about life itself. Um, it's very enjoyable. And I hope every listener out there, you do your thing that you enjoy the most. I
And
think
which
that's my way of living.
Yeah, and that will make you happy, right? So, thank you so much, Jan, for your wisdom, for your expertise. Like again, I will share all the links and the description below, and I hope people will find it useful. Like, and they can skip maybe some of the conversations, like which were like very complex, right? And they will just jump into
Yeah.
timeline and get what they need from, but eventually obviously reach out to the team to clarify. They're very diligent. Yeah, I work with them on multiple occasions, and I know that they can literally help you in many, like those like early stages where you're confused and that's your first M&A or first way to sell secondaries. Thank you so much, and I really wish you success and a prosperous year.
Hey, thank you so much, Konstantin, and very, very positive vibes all around the world. Thank you.